we're joined by Peter McGuire. He's the founder and managing director at Australia-based investment firm CWA Global Markets. Hello to you, Peter. So oil prices
Good morning,
fell
Lindsay.
14% in May. Which way are they headed now?
Well, Lindsay, good morning. I think, we've seen some very, very wild trading over the last couple of months, and we think that they're headed north again. We wouldn't be surprised to take $80 out by the end of June and probably $85 by the end of this summer season. So, today is the start of the summer driving season, as you mentioned, hurricane season, and of course, geopolitical concerns. So, it's going to be a very, very interesting summer for the crude oil and energy markets.
Well, give us some more detail then on those factors that will drive it higher.
Well, I'm certainly worried about what Israel did overnight. That was a major concern from a geopolitical. And then you talk about North Korea. That seems to be bubbling along. Iran hasn't gone away. So, from a geopolitical side, there's always a couple of things happen this time of year, traditionally. The hurricane season, they say it's going to be as bad as '05, and that was frightening. I remember talking on Bloomberg 5 years back, and it's just, what's happened in that whole region. If this, if it turns into a terrible season, then it's going to be very, very tough on crude oil. And then the other side, of course, is you've got increasing demand through driving season and so on. So it's very, very interesting where prices will go this year.
What about the economic fundamentals? Aren't you concerned about a slowdown in growth in China or a double dip in Europe?
Yeah, I worry about the housing market in China, certainly, but I'm also mindful it's Northern Hemisphere. It's going to take a couple of months for those numbers to really come into the market, unless they're, frightening. As far as Europe's concerned, I think it'll continue to bubble along. I think the US will continue to grow, and if you're looking about consumption, Lindsay, it'll grow this year versus 2 years of contraction. So, I'm just looking at more consumption over the next couple of months.
Now, Peter, we're running a story here on Bloomberg today about how May was the biggest slump in oil prices since after Lehman's collapse. And that, of course, we know what happened after that. We had a big recession. So some people are saying that this slump in oil prices and across the wider commodities sector is perhaps a signal that we've got another recession coming.
Well, we may have. I think it's going to be, you talk about double dips, Lindsay. It may be later in the year. You may be talking October or November. But at the current frame, I think we're going to see continued growth to the upside for the energy markets over the next couple of months. The reasoning for it is quite simply increasing demand from the US, and we're talking about hurricanes and driving season. So I think rolling all that across with geopolitical, I think it'll be stronger over the next couple of months. But we may see a dip after that.
Thanks very much, Peter McGuire, Managing Director of CWA Global Markets.
Thanks, Lindsay.